Good morning, good afternoon, good evening, everyone. Thank you very much for joining us today at the OECD's Tax and Development Days. We have an exciting session for you. We're talking about all the exciting work that the OECD and INGF undertake regarding the taxation of the extractive sector and the support we provide to resource-rich developing countries. As a way of introduction, my name is Andrew Viola. Very nice to meet you all. I'm a senior advisor in the Center of Tax Policy and Administration at the OECD. I lead the OECD's work in the taxation of the extractive sector and provide support to resource-rich developing countries to ensure that they maximize the benefits from their natural resources. I'm also joined by my colleague, Thomas Lassor from IGF. I'll now pass to him to introduce himself and IGF as well. Thank you, Thomas.
Thank you so much, Andrew. Really happy to be here and to speak about this important topic with so many experts today. So my name is Thomas Lassor, Thomas. I'm a senior policy advisor, and I lead the IGF's Global Mining Tax Initiative. For those who don't know, the IGF is the Intergovernmental Forum on Mining, Minerals, Metals, and Sustainable Development. It's an initiative that now has 84 members, latest one being Chile, as of a couple of weeks ago. So those members are governments, the main points of contact are Ministry of Mines, and they come together to discuss how to use the mining sector to promote sustainable development, maximize benefits, and minimize harm. So I'm really happy to be here. We have a long partnership with the OECD, and it's the opportunity to showcase it today. Thank you, Andrew.
Great. Thank you very much, Thomas. Let's get into it now. So this slide will give you a bit of a feel for some of the topics that we'll be covering today. So today's presentation will go through the following items. So we'll kick things off to highlight the importance of the extractive sector to developing countries. Then we'll be providing an overview of our BEPS in the mining program, which is the support we provide in partnership with the IGF to developing countries. And we'll also highlight some of our recent achievements and highlights for 2023 of our BEPS in the mining program. From there, we'll also hear from some country discussants who would share their experience regarding the assistance that we've been provided through our BEPS in the mining program. Firstly, we'll hear from Mr. Webster Malenga, who's a senior tax inspector from the mining audit unit from the Zambian Revenue Authority, to share his experience regarding the assistance that we provide through our deep dive programs. We'll also hear from our colleague, Mr. Sergio Oscar Vieiro, from the Federal Administration of Income in Argentina. He'll share his experiences regarding the assistance that we provided Argentina on the lithium industry. And then from there, we'll change gear and discuss what we have planned for 2024 and beyond. And then again, my colleague Thomas will then provide an overview and a little more depth around the current work items and some key highlights of the IGF as well. So just to get into it a little bit and to get you thinking about the issue, what do you think these numbers on the slide represent? I'll give you just a few seconds to have a think about it. Well, the first number of 100 to 240 billion US dollars is the amount the OECD has estimated that BEPS practices cost countries in lost revenue annually, which is equivalent to 4 to 10% of the global corporate income tax revenue. Significant amount and a significant challenge that is impacting many countries, but particularly developing countries that may lack the resources and capability to address BEPS-related issues. Now the second number, 470 to 730 million US dollars. This number is IMF's assessment of BEPS-related risks associated with the mining sector each year in Africa. So this figure is only the mining sector, so not other oil and gas products or other extractives, only in Africa, and occurs each year. As you can see, it's a significant amount of income that is lost and revenue from those developing countries. Again, these numbers are significant, and these are the issues, and the issues are material, and we're here to address these issues. Just again to think about these issues in another light, and I think this slide does quite a good job at highlighting the importance the extractive sector is to developing countries. We presented a similar slide last year, and this slide presents some data that we have attained from the World Bank that shows the total resource rents as a percentage of GDP. And again, it's a really good tool to highlight how important the extractive sector is to developing countries. As you can see, many developing countries, their natural resource rents make up a significant portion as a percentage of GDP. They're heavily reliant on the returns from natural resources to support their economy. Now let's take a few for example. Let's look at the DRC, Zambia, and Mongolia on the left-hand side of the graph. You can see their resource rents as a percentage of GDP are all above 30%, which has a huge income on their economy. Now let's break that down a little bit further to the various income groups. You can see about in the middle of the slide there, in the middle of the graph, we have the low-income countries. So their resource rents from natural resources as a percentage of their GDP is around 13% in 2021. Now let's compare this to the high-income countries. So you go all the way to the right-hand side of the graph, and the figure drops all the way down to 2%. And let's compare that to OECD member countries as well, where that figure drops even further to 1.4%. So it really highlights that for developing countries, natural resources makes up a far greater contribution to their GDP than developing countries. What we can also see from this data is the large increases in natural resource rents as a percentage of GDP from 2000 to 2021. It shows that the return on extractive is volatile, and generally it's indexed to the commodity prices. And from this, really understand the importance the extractive sector has on developing countries. As such, the OECD and IGF over the years have developed many programs and tools to maximize the return developing countries receive from their natural resources. And that's what we will be presenting today. The following slides will be going through the support that we provided to resource-rich developing countries over the years. So again, to ensure that resource-rich developing countries achieve the maximum amount of revenue, the OECD and IGF entered into a partnership, what we call BEPS, in the mining program. So this partnership brings together the skills, experience, and expertise from both organizations. So the IGF bring their industry experience and their access to professionals with mining and tax backgrounds. And the OECD, quite strong in international tax and the strength and resources of the Global Relations Program, the Global Relations Division, and the wider CTPA, including the Tax Inspectors Without Borders program. The BEPS in the mining program consists of what we call a three-pronged approach to our technical assistance. And those three elements are listed on the slide there and at the bottom half of the slide. On the bottom left-hand corner, you can see the deep dive programs. So this is our one-to-one multi-year engagement in which we tailor a program of technical assistance which is specific to a country. The other element of our BEPS in the mining program is our regional training through is in the middle there, as you can see. So we offer an 8-module training course on international taxation with specific focus on the extractive sector. What's really important about our regional training, we also conduct this training in collaboration with our regional partners. Our regional partners are quite important because they are in the best position to understand the needs, wants, and requirements of their members, which enables us to tailor the training sessions accordingly. They also have a pool of experts that we work with to help deliver this capacity building as well. So in Asia, we work with the ADB. In South America, we work with CIAT. And in Africa, as you can see, we work with ATAF. And now the last element of our BEPS in the mining program is our practical guidance. So that's our tools and publications. And we refer this to our one-to-many approach to technical assistance. Like, of course, we would love to, but we can't provide technical assistance to everyone. So we've developed and we continue to develop a range of toolkits and practice notes to help resource-rich countries address key BEPS risks that occur along the mining value chain. And we'll go into these three elements in great detail throughout this presentation, but hopefully this gives you a good idea of the broader picture and the BEPS in the Mining Program partnership between the OECD and the IGF. So this BEPS in the Mining Program has been around since 2018. That's when the partnership started. Both organizations saw a need and demand for this work from developing countries. And we also saw an opportunity for impact and to achieve actual results. And what are some of those results that we've achieved? We've posted some of our key achievements on this slide. So we've been able to conduct at least 33 capacity building sessions. So this is through our regional training and our bilateral sessions. We've also trained over 3,000 government officials. So you can see our program is wide reaching. And on average, 95% of participants agree that our sessions have increased their capacity. So this training is practical and delivers actual technical improvements to the participants. We've also developed and released 5 practical guidance notes on material BEPS risks related to the mining sector. We'll be discussing the most recent publication shortly as well, which is quite exciting. And we've also strengthened international income tax legislation, including transfer pricing for 5 developing countries. So our focus is not only on training and capacity building, we also provide a full range of assistance such as looking at the tax legislation, looking at their mining code to ensure that it's up to date and best practice as well. I've also shared some impact stories. So we've developed these impact stories to help explain and highlight the assistance that we provide and the benefits we're providing to resource-rich developing countries. We'll hear from our colleague from Zambia shortly. We've been working with the Zambian Revenue Authority for many years in building their capacity to audit mining companies through a deep dive program that's occurring there. Another impact story is the work we've been doing with Mongolia. So we've been working with Mongolia since 2019. And a few years ago, in partnership with the Tax Inspectors Without Borders program, we were able to achieve an amazing outcome on a key transfer pricing audit there. The audit was able to deny USD 1.5 billion in carried forward losses and USD 228 million in additional income. As you see, it's real and practical benefits for the people of Mongolia. And also, we've got an impact story on Guinea. If you attended last year's session, you would have heard from our colleague about the underpricing of bauxite in Guinea and the measures they've implemented to lift the bauxite export price out of Guinea. This includes the establishment of a bauxite reference price. So this bauxite reference price sets the floor on bauxite exports. And I guess one of the main benefits of this, it really changes that onus of proof from the tax authority to the taxpayer, as taxpayer has to show why they're selling bauxite below this reference price. So all these impact stories are available on our website. Links are here, and again, the slides we presented after the session, so feel free to go and have a read of those as well. But hopefully you can take out of that is this BEPS in the Mining Program is able to achieve real results for developing countries. So just going into a little bit more detail around the specific technical assistance that we provide and those 3 prongs that I mentioned earlier. The first part of that is what we call our bilateral deep dive program. So our deep dive program provides tailored one-on-one support to resource-rich developing countries. They're bespoke programs. They're tailored to the needs and wants and requirements of the specific country. They're not a cookie cutter model that we deliver to all the countries. We conduct a scoping mission and develop a detailed work plan that is tailored to the specific needs of that country. It's an intense multi-year engagement, typically 3+ years. As I mentioned, we've been working in Mongolia for almost 5 years now, so it's not just a 1-2 year thing, it is a longer term program. We have regular interactions with them. We build bespoke capacity buildings on these deep dive programs. Again, no training package is the same across the different countries. They're designed specific to the requirements of that country. So we look at what's their specific legal environment, what exports do they, minerals they export, and what is their institutional pathways as well. And we generally look to conduct this deep dive program across multiple government agencies. So we look to the Tax Authority, the Ministry of Finance, and the Ministry of Mine. But there are others we work as well within country. There's a lot of threes, but the deep dive program focuses on three main areas, and they are tax and policy. So we review the international taxation legal framework of that country to ensure that it's best practice, and generally provide recommendations for improvement. Again, that capacity building, so we identify capacity needs and develop specific training packages. And as I mentioned earlier with the Mongolia example, audit and implementation. So we will work quite closely with the tax inspectors, with our borders expert that is working within that country, to help build a capacity building program there as well. And get a bit of a feel for the countries that we work with. We've recently launched a few new programs. So the newest program that we launched was Peru in October 2023. You can see that in the top right-hand corner of the slide. And there we had a mission, and we conducted a scoping exercise, again, to understand the requirements of all the various government agencies. And from that, we're able to build a detailed work plan in consultation with the government agencies to make sure it's fit for purpose and what they want to get out of the program. And then we're in the process of currently delivering that assistance as well. We're also looking to add Zimbabwe in 2024, and this is in partnership with ATAF as well. And some of the existing deep dive programs, they all have their own work plans, and we did conduct missions to all these countries in 2023. And just give you, again, a feel for the assistance that we provide. Last year in Ecuador, we conducted an in-person capacity building session on the copper industry. So it's a new industry for Ecuador. So we hired a copper expert to come and deliver a 2-day detailed training package on copper pricing. As well, I mentioned we've worked with Guinea, so we've assisted in developing that bauxite reference price, and also some work in improving their transfer pricing legal framework. In Papua New Guinea, we've developed a model fiscal term sheet, and again, transfer pricing capacity building. There's a picture there at the bottom right-hand corner from when we're on mission there late last year. We're also going to Papua New Guinea next week to continue the assistance on a deep dive program. And Mongolia, again, we still continue with that program there, ongoing capacity building that is linked to risk assessment and also the compliance action that they're conducting in the extractive sector. So I hope that gives you a feel of the work we're doing on what we call our deep dive programs. So just moving along, the other element of our BEPS in the mining program is the toolkits and publications. So the IGF and OECD have developed a series of publications on significant BEPS risks impacting resource-rich developing countries. Again, this is our one-to-many approach to capacity building and knowledge sharing. And in some exciting news, if you haven't heard, in November last year, we released our latest toolkit. It's a new practice note titled Determining the Price of Minerals, a Transfer Pricing Framework. We also released, connected to this particular toolkit, 2 schedules applying the toolkit to specific commodities. One was on bauxite, and also a schedule on lithium as well. So the toolkit provides a framework on how to apply the comparable uncontrolled price method, or the CUP, to accurately determine the price of mineral exports. Because through our work, we understand and we know that the underpricing of minerals is significant BEPS risk that all countries face, particularly developing countries. So the idea of the toolkit is to really provide practical and meaningful guidance to assist and assess the transfer pricing risks that are related to mineral valuation. So the structure of the toolkit, there's 3 main sections. The first section really looks at the mining value chain and some of the transfer pricing risks that along the mining value chain. The toolkit is focused on mineral pricing, but we do touch on some of the other risks in a little bit of detail. But the main part of the toolkit is the dot point 2 there. So it has a framework of applying the comparable uncontrolled price method to value minerals. So it looks at the economically significant factors that impact price as well. It also looks at what's in the transfer pricing guidelines and the guidance there to price minerals as well. But importantly, to highlight, the toolkit doesn't override the guidelines. It aims to align the text to the transfer pricing guidelines, but it's meant to bring it to life and make it more practical and meaningful as well. And we also have a final section on administrative approaches to price minerals. So we look at the other options that countries can implement, such as safe harbors and APAs as well. Again, we have got a link to the toolkit there. I encourage you all to have a read of the toolkit. And again, the aim of it is really to assist developing countries in maximizing their tax revenues derived from mineral exports. As I mentioned, we've also released specific schedules to the main toolkit for specific commodities. As we know, each and every mineral is different. They all have their own supply and demand factors. So to make this toolkit meaningful, we've developed schedules applying the toolkit to specific minerals. We released a bauxite schedule accompanying the main toolkit. So this applies the framework and toolkit to bauxite. We also released the lithium, a schedule for lithium for public consultation in November 2023. That public consultation has finalized. And thank you everyone that provided comments. The comments are on the OECD website if people are interested. And we're in the process of updating the toolkit as well. And we're hoping to publish in the toolkit later this year. The links again to that toolkit are available in the slide deck. And if you're exporting these commodities or interested in them, I highly recommend you to read these publications. We're also currently developing a toolkit on copper, which hopefully be released this year, and another commodity to be released as well. But we are looking at some other alternatives such as gold, iron ore, or coal. I am mindful of time, so I'll keep going. I might get through these last few a little bit quickly. So just the final element of our BEPS in the mining program is our regional training program. Again, we do this in partnership with IGF and our regional training partners. We offer a training course on international taxation that specifically focuses on the extractive sector. We get government officials from a range of government agencies such as the Tax Authority, Ministry of Mines, and the Ministry of Finance that attend these sessions. The training is an 8-module course on international taxation in the extractive sector. The topics are significant BEPS risks that occur along the mining value chain, such things like marketing hubs, selling a mineral, financial transactions, and offshore indirect transfers. And again, we run this training program in the 3 separate regions with our 3 separate partners. And just to give you a bit of a highlights that occurred last year, in Asia, in partnership with the Asian Development Bank, we conducted an in-person training program in Manila at the ADB headquarters. We had 37 government officials from 11 different countries attending, and another 54 attended virtually as well. We've got some pictures on the right-hand side of that training as well. We also concluded the regional training program virtually in Africa, LAC, and we also provided a streamlined version in West Africa in partnership with WATAP as well. Just finally, just sharing some exciting news. We have developed and recorded new online content that will form part of the 2024 training package and offering. We've recorded all 8 modules, and the idea is that participants will be able to access the training on the OECD's knowledge sharing platform, the KSP. And then we'll have a Q&A session on each module in each region. And these Q&A sessions, participants will be able to ask questions, present case studies, and share their experience with a broader group. Keep an eye out for invites. They're looking to be sent out in June. So if you'd like to attend those. Great. Thank you all for your attention. It's probably enough from me now. I hope you have a good understanding of the assistance of the OECD and the IGF and the assistance we provide through our BEPS in the mining program. I'll now pass the floor to Mr. Webster Malanga from the Zambian Revenue Authority. He's a senior tax inspector with the mining audit unit, and he'll share his experiences of our deep dive program in Zambia. Mr. Malenga, the floor is yours. Thank you.
All right, I have abridged the presentation just to give a flavor or a sense of this deep dive program that the OECD, ATAF, and IGF undertook. This program was really a deep dive called BEPS in mining, covering as it did help in improving our legislation and also actual technical help on the mining tax issues and others. Now, the following are the activities that were undertaken under the program. We did a training on the manganese evaluation for export purposes. To encourage value addition within the country, the government introduced export duty on the mineral ores and the concentrates. Now, the way the customs were valuing the manganese ore, for example, they were looking at every mineral contained in the manganese ore and value it using whatever method they did. Now, that was obviously the wrong method, and it was made clear through this cooperation. So that now there is at least the harmony between the exporters and the customs officers when they are working out export duty. Then there was training delivered on the evaluation of mining rights. In the past, we only limited the knowledge on the methods of valuing mineral rights. Now, at least we're exposed to 4 possible methods of valuing mining rights. Then there was a practice note on copper pricing that was produced, and also another practice note on manganese pricing. There was also a practice note produced on mineral apportionment. In this country, not all minerals that seem to originate from this country actually come from this country. Some, especially copper, come from the Congo. And if, of course, the minerals are from another country, you can't charge mineral royalty. And therefore, if a mining company attributes part of its sales to having originated from the Congo or any other country, there would be mineral royalty. There would be no mineral royalty payable. So with this practice note, at least we received a lot of help and found a way of getting around that challenge. Then there was various help given in transfer pricing, covering different mining companies. There was, of course, hands-on experience. Our experts were always available to give help, even at short notice. The experts made a lot of contribution in improving our legislation, especially as it relates to transfer pricing. Then what was the impact? What we noticed over time after this collaboration is that mining companies who were not in the past declaring mineral royalty on precious minerals, or even declaring these minerals at all, started declaring. In this country, the predominant mineral we mine is copper. Now, contained in copper are precious minerals and other byproducts. Now, since mining companies often sell the minerals to related parties, they didn't care much about declaring the trace elements. But after this cooperation, of course, they are now declaring gold, silver, and other metals. Then in the past, we used to have many companies paying commissions to related companies, ostensibly, or it was presumed they were marketing copper or other minerals for them. Now, these commissions, of course, we questioned them. And after this cooperation, we are no longer seeing these commissions in the accounts of these mining companies. Then in the past, we used to see a lot of hedging arrangements. And these hedging arrangements among group members often resulted in hedging losses. And these hedging losses, for some reason, were transferred to the mining companies in this country. And we are no longer seeing that. Then the other thing we have seen as a result of the increased capacity in our revenue authority is that companies are changing business models. For example, in the past, there were some mining companies who would separate their mining activities, so that maybe a company is formed just to provide a particular service to a mining company, which a mining company anyway could do on its own. But because there were interest rate differentials, not interest rate differentials, but tax rate differentials across sectors, mining companies took advantage of that. We are seeing that disappearing. Also, we had the mining companies belonging into a group, and in that group, some will be just processing companies, others will be a smelter. Then you see the smelter would buy from a mining company and not declare anything relating to trace metals. But after the changing business model, we are seeing now the companies that are mining are also processing, or if they have their material treated at a smelter, it is just a tolling arrangement, so that whatever comes out of that mineral belongs to the mining company. And the mining company, now we are seeing a declaration of trace elements or trace minerals such as silver and gold. Then after this collaboration, what else would we look for? We would still need help in the area of guarantee fees. It's an area which we didn't encounter over a long period of time. Now we are seeing this as a common feature. We would also want to see help in hedging accounting. Then the gemstone industry has posed a challenge. We want to see help in that area. Then we have challenges with the discounts and premiums on the mineral sales. Although our law prescribes that for sales of minerals, base and precious minerals to related parties, reference prices should be used. That is the ruling world market prices. Some companies now take advantage of the discounts to reduce the sales of the minerals, which then negates the essence of the provision. So we want to see help in this area. We also want to see a lot of help in dispute resolution. Because raising assessment and all is one thing, but how do you resolve? So we expect help in that area. Then we have seen that some metals on the international metal markets are quoted in various units, and the conversion by taxpayers and us sometimes are different. So we want to see more help in that area. That ends my intervention, Andrew.
Thank you very much for the overview of the assistance that we've been providing to Zambia. As you can see, the assistance is tailored accordingly. So we'll help with the copper pricing and also the manganese pricing, and some very good examples there of the impact that we've been able to provide as well through the additional declaration of the trace elements, which has material impact to the revenue of the country as well. But the work's not always done. There's a whole range of assistance that we can continue to be provided. So thank you very much for that. I'll just start sharing the screen again. Hopefully you can all see that. Great. So I'll now give the floor to Sergio Oscar Vero. So he is from the Federal Administration of Public Income in Argentina. Mr. Vero leads the International Tax Department for National Large Taxpayers. So Mr. Vero, the floor is yours. Thank you.
Well, thank you, Andrew. Good morning to all, good afternoon or evening, depending on where you are. First, I would like to thank the OECD and the ICF for inviting Argentina in this session. I am familiar with the work of both, so it is a great honor to be invited here. And as I will say, our government has been involved with the ICF in exploring how to tackle the challenges that taxation in the lithium industry arises. And on the other hand, I am myself a delegate for Working Party 9 on consumption taxes in the Committee of Fiscal Affairs at the OECD. And I work alongside with my colleagues, also with the Working Party 6 and 11. In the sake of achieving more efficiency in my intervention, I will switch to Spanish. A big thank to the translators in advance, but in order to keep my presentation brief, I think it is more efficient to speak in my mother tongue.
It's quite difficult in just a few moments to be able to summarize, especially after the wonderful intervention from our colleague from Zambia, what he has and what Andrew has summarized, because in a certain way they've advanced many of the things that I will be able to say. I was requested to underline certain matters that the Argentine experience has had, especially from the lithium industry. Now, with regards to this industry specifically, growth that has taken place now for some years, and the outlook is for things to keep along this path concerning lithium. And let me tell you, this is a reality, and we can explain things thanks to the energy transition that has taken place based on the electrification of transportation specifically, but not only because of this, but especially. As a matter of fact, there's important pressure. In other words, the Argentine government some years ago, they've been dealing with this topic with great seriousness, and they wish to take actions where we can enshrine the technical assistance that we have received from the IGF that I shall address at present. Argentina, in America and South America, together with Chile and Bolivia, represent a very high percentage of lithium reserves. And I insist, after the growth of the world demand, there is a strong pressure on this industry. And as a matter of fact, we have to take into account the controls from the government regarding the industrial activity. What I am in charge of partially has to do with taxation. Therefore, this is what I shall be addressing. Especially one of these three focuses, I shall merely mention the other two. On the one hand side, the exports of lithium in Argentina. In other words, they have to pay export rights. This is collected by the General Customs Office. I shall talk about this office in a few seconds, by the way. And on the other hand, minerals amongst these lithium, these are natural resources from the provinces, hence their extraction creates the obligation from the mining company to pay what in Argentina we call royalties, which is a value that is determined depending on the value of the extraction of the mineral, the efforts and the costs to be able to extract this mineral. And from a tax perspective, which is my specialty, exports, as you might know, generate rents, which has to be taxed from the source country. In this case, it would be Argentina. And it generates the challenges to be able to analyze if the prices might have an impact in the royalties and the export rights, if these are being declared properly, or if there's some sort of under-invoicing of these exports. And this is the main challenge, undoubtedly. Of course, there are other challenges, as the Zambian colleague was addressing. And we can talk about the different aspects, for example, the funding that the mining companies obtain in many of these cases. And here I'm not referring specifically of lithium, neither our experience in Argentina, because we do not have sufficient information to underscore this, but there are many companies that to be able to deduct interest, they rank with specific amounts of equity. Hence, in that sense, and addressing this topic, Argentina has adopted Action 4, the BEPS measure package, precisely the deduction of interests. Now, in Argentina, latest data to be able to introduce directly into the technical assistance that we have received from the IGF and other strategies that are being analyzed in the country. The products that are most exported are lithium carbonate in the first place and lithium chloride as well, in a lesser extent, and other companies are analyzing, are starting to work into lithium hydroxide. And the affected provinces affected in our country are the northwest provinces. They're called Jujuy, Catamarca, and Salta, mainly, at least for the time being. And in ending, regarding the strategies that our government is developing, on the one hand side, we have to underscore that in Argentina, the General Office of Customs, together with the Tax Office, which is the General Office of Tax, they create one single office. Therefore, the intention is to coordinate an integrated job amongst both agencies. Secondly, there are strategies for the exchange of information with the different provinces that have, as I said before, the responsibility of collecting mining royalties. And in many cases, there are business models where state participation has taken place in these mining companies as part of the requirements for the authorization of exploiting these mines, in this case, in other words, the salt deposits. And a third strategy, I understand the majority of you might know, is the exchange of international information. Argentina, since many years, has worked hardly on this matter in increasing its network of agreement for the exchange of information. And it's very important to be able to determine and to understand in many cases if, for example, operations that are cross-cutting are being declared properly or under-invoiced, and to be able to have assistance regarding the exchange of information. And fourthly, as I said before, there is a collaboration and international cooperation strategy, a strong one on the one hand side, and this has meant technical assistance received by the IGF. And we have to thank them, but by the way, thank you, Thomas and Jacqueline. I see them here, so thank you kindly for the work carried out. Analysis concerning the internal standards took place, visits to our country took place as well. We obtained explanations, roundtables took place for reporting purposes, and everything is being analyzed by the Tax Administration Office, by the provincial offices as well, what's in their hands concerning royalties, for example, and they have trained us as well in financial models to be able to estimate the financial model that the mining companies can adopt from the outlook that the state needs to mandatorily participate concerning the gains of these companies from a taxation perspective, but also to allow their development. And this understanding took place, and everything was quite fruitful concerning the trainings that took place. And regarding the final report, as a matter of fact, there have been interesting reports that are being analyzed with the tax office, like, for example, guidelines for the taxpayer regarding the way of stating or informing about their lithium exports. As I said before, and in ending, the main challenge is that of the eventual under-invoicing of lithium concerning transfer prices. To us, this is quite important, the work that is taking place by the IGF and the OECD with this complementary note concerning transfer prices, because regarding lithium, we have detected that in many cases, companies informed under-invoicing at prices that many sectors and many consulting companies understand that these are reference prices. And this is what was interesting to us with regards to the audited company. And here I'm mixing two themes. And of course, we have to address these audit missions, and the tax administration needs to understand that they need more information concerning the declared operations by these companies. Hence, in those fiscal audits, we have to underscore that we have to try to find an agreement. We have to find a legal outcome, because the Argentine legislation needs to underscore that transfer prices, these prices need to be justified with regards to comparable prices by the CAP, by its acronym in English, and not throughout other methods which are indirect methods, because although this industry is under development and development is still not consolidated at a global level. Hence, it's very difficult to utilize indirect methods that require to be compared with the financial statements from other companies. Companies, in the best of cases, independent ones that, in the case of lithium, are not identified properly. I hope I didn't talk too long, and I hope I was clear during my presentation, and I'm sorry I did not prepare a presentation, but I thought that I could be quicker in this manner. So once again, thank you kindly, and I will be present throughout this session. So Andrew, you have the floor.
Great. Thank you very much, Mr. Vero, for that wonderful intervention regarding the lithium industry in Argentina, and a really good overview of the assistance that the IGF has provided. Thank you very much, Jacqueline, for the blog in the chat as well. It's also on the slide deck. It's a blog of the assistance that IGF have provided more recently as well, if people want more information. So we are running out of time a little bit, so we may not get much time for question and answer, but I'll now pass it over to Thomas from IGF to continue with the presentation. Thank you.
Thank you so much, Andrew, and thank you, Webster and Sergio. This was a very insightful overview of the type of work we do. And I think they do highlight two ways that we work with countries and we support them. The first, in Zambia, is the all-encompassing, exhaustive program of technical assistance, where we try to address all of the main areas of tax planning and areas of revenue loss for countries to really make a difference over the long term. And then in the case of Argentina, it's a more pointed advisory work where we identify one specific area where we can really make a difference, support countries there, and that's based on some of our knowledge products. In that case, our mineral pricing toolkit that Andrew described. So I think these are very complementary, and I thank you again for sharing those. We have a lot coming up. We're going to continue more trainings. We're going to release more toolkits. We're going to work with more countries. And so feel free also to send requests if you would like to work with us. We like to help. And we want to do it with more countries, more governments, and really make a difference in mining revenue collection. I'm going to switch very quickly to some of the next slides to talk about an exciting project that came to fruition last year. It's this one, yes. The future of resource taxation. So it's a joint project with ATAF. And we started a few years ago on the basis that, was there something new? Was there some best practice, some new ideas that governments wanted to share with one another around mining tax policy and tax administration? And so it was a long project. It was very consultative. We got ideas. We got to survey governments. So on the next slide, Andrew, you can see some of the results of the survey that show that the types of issues that governments were facing systematically around with mining taxation. Some of the key themes are going to be very familiar to you. Why governments were sometimes dissatisfied with how mining was contributing to their revenues. We also consulted governments and other stakeholders around ideas that could be put forward and shared that could maybe improve in some cases the way mining was contributing to government revenues. So on the next slide, you can see sort of these 10 ideas that came out of this project and that are developed in this handbook that was published last year in 2023. Jointly with ITAF, we organized a conference in Zambia, actually, to launch the paper and to discuss those topics in more detail. So I recommend that you take a look at the handbook. I think Jacqueline can also share the link in the chat if you want to take a look. It's also available in French and Spanish. And some of the ideas, they go in very different directions. Some of them go into a more progressive regime with fairer balance of benefits for countries and governments. Some of them go into simplified regimes, simple fiscal instruments that can be easy to implement and avoid some of the implementation challenges we faced. And some of them are a bit more far-reaching and involve a greater role for the state, possibly, in some of these areas. We're almost at the end, so I'm rushing, I'm aware, I apologize for that. If we go on the next slide, and yes, a bit of promotion, if you don't mind. We're hiring, the program is growing. And so if you know anyone who would like to work with us as a policy advisor to work on this program, please share the link, encourage them to apply, and we'll be happy to consider their applications. I'm going to stop here. Thank you very much for your attention, and I hand it back over to you, Andrew.
Great. Thank you very much, Thomas, for that quick intervention. Just sort of reiterate the quick point on the future resource taxation. Do highly recommend to everyone to have a read of those 10 policy ideas. Definitely thought-provoking, and also various policy options that you could consider. You may sort of go to a shop and you may pick and choose a few things, and that's sort of what it is. There's a lot of options there for everyone to consider as well. I think we have run out of time. Unfortunately, I think we'll get to the question and answer, but I haven't seen many pop up in the chat, so I might think we've been quite clear in our messaging, but do feel free to send myself an email or Thomas or the generic email as well that's here or on the next slide. And if you have any specific questions, even to our panelists as well, feel free to send us the questions and we can address that as well. And just finally, thank you to all our donors. You can sort of see hopefully from the presentation, all the support that we do provide. And without your support, we will not be able to do this all amazing work that we currently do. I might stop there unless, Thomas, you got any other closing remarks, but thank you all for your attendance today, and do please stay online for the next session, which is on VAT on e-commerce in developing countries.